Hi, my name's Glenn Hasselman. Just making this video for the free accounting software users to show you guys another technique for handling multiple bank accounts in free accounting software. So let's say you have an investment account like a high interest savings account, and that's the reason for the additional bank account. So one way to handle that is to just set it up as a normal account. So going into accounts, select new account, let's just call it high interest savings account. Not that I think anyone is really getting any interest at the moment, but anyway, save that. Now that's just a normal account. So the reason why I think that this is a good way to handle it where it's a high interest savings account is that most of the transactions are just transferred from your main account into that account and back. So let's say so we're here on the cash worksheet, and we're putting money into the high interest savings account. So we can go new cash transaction. Now that would be a cash payment because we're paying money out of our bank account. Just pick the not applicable. And let's say we put $1,000 in. Then we select the account, high interest savings account, and it's defaulting to GST not applicable, so it saves that. Back on the cash worksheet, you can see that in fact it looks like I just put $100 across. Okay, that's fine. I think I said 1,000, but anyway, $100 is fine for this demo. So we had 110, and we've paid out 100 to the high interest savings account. In the balance sheet, you can see high interest savings account 100. Okay, now going into the transactions, there's just one transaction in there, and we can reconcile this, but before I show you how to reconcile that, I'll do another couple transactions. So let's say you want to draw some money back from the high interest savings account. It's just the opposite thing. You're just doing a cash received and pick a date. Okay, let's say we're getting $50 back. Pick the account high interest savings account. So now this is a cash received. It's being received into the main bank account from the high interest savings, and save that. We can see on the cash worksheet we've got those two transactions on that bank account. If we go to the balance sheet, again we've got the deposit of 1,000 and the withdrawal of $50. Okay, and now another thing that might happen is you could have interest or bank fees from this account. So they would be best entered by a general journal. So let me show you how to do that. So over here under the transactions worksheet section, there is a thing called general journals, and let's do a new transaction. So say the date of this transaction is 31st of July. I'll just use not applicable, although often if I'm entering interest or bank charges, I would use the name of the bank as the counterparty. So let's say firstly bank charges, and it's a $10 monthly fee, let's say. Goes to bank charges, and it says GST free purchase, although the gross amount is not shown on BASs anymore, so GST free or GST not applicable really doesn't matter if it ever did. Anyway, so that's the debit to the expense of $10. Now we want to show the money coming out of the high interest savings account. And that's a negative 10 to the high interest savings account, and a negative is also a credit, so a credit to the high interest savings account. And save that. Okay, and if you want to record interest, let's say they pay you some interest. Of 50 cents. Now that's going to the high interest savings account, so it's a debit to the high interest savings account of 50 cents. So we've got a positive value there, increasing the balance. Now we need to do the credit to the interest received account, and that's a negative 50, being a credit to the interest received revenue account. So that's how that's done. And now if we go to the balance sheet and go into that high interest savings account, we can reconcile it. So going to balance sheet, high interest savings account, got some weird date there, probably because I haven't set up the ledger start and end date, but anyway, and say we're reconciling to the 31st of July, update that, then select all the transactions. Let's say this is our bank statement balance of $40.50. Type that in there, and it goes green because it's matched. Now, unlike the cash worksheet, it's asking me to put a statement description in there. So when you're reconciling a normal account, you're not always reconciling to a statement. Certain things like, let's say something like a rental bond is not reconciled to a statement. It's just like you paid that bond out and then you got it back, so it balances off against each other to zero. In this case, we are reconciling to a statement, so it wants the description there. I'm just going to write bank statement balance and click post reconciliation. Okay, and that puts that there. And so you can see that you can reconcile any normal account. So you don't have to be using the cash worksheet to reconcile to a statement as a bank statement or any other kind of statement. You can just use a normal account for that. The other thing, just to wrap it up, I should show is the profit and loss. So just want to show the interest received coming through there. I think some people might find it confusing that the interest received is a minus 50 cents on that journal, which is a credit. The reason is because it's an income, so that's a credit. So credits, the normal sign for a credit is for liabilities as well as revenue. So it's just an accounting convention. There's the bank charges coming through to the profit and loss as well. Okay, so that's how to set up a separate bank account as just a normal account in free accounting software. I hope the video has been useful. Thanks for watching.